Hello guys, this is the pre-market analysis of 14th of August. So yesterday was Sensex expiry and market was in a range. We got that big candle also, cash candle. Now see, the range has been very clear from day before yesterday. That is 24 275 on the downside and 24 475 on the upside. Now, as long as the market is in this range for today, it is going to be one upside move, then one downside move, 100 point up move, 100 point down move is what you can expect from the market. And it's a Friday, it's going to be a straddle day. So you will see one up move. And if it comes to that 24 475 level, you see a meaningful weakness over there. It is better to short there because that range may be maintained. And a down move to 24 275 300 level, you see a meaningful support there. You can look for a mean reversion trade again because there is a high probability market stays in the range. This is how they operate, right? If you open a flat, it is a flat opening. Despite a lot of positivity, it's a flat opening. There is a high chance that the market will give an up move for today. So you can look for, if it is a flat opening, you can look for an up move, or you just stay there and you can sell a put, and then going up, you can buy a put, or you can sell a call from 24 475 level coming to 275. You can look for a reversion again. So if it is opening flat, it's actually opening flat. That's what I want to repeat. There are a lot of positives. Oil prices coming down, US market is positive, Indian ADRs are positive, right? Inflation is positive, so everything is positive. Market should be going up at least till day before yesterday's high. That's something which you can easily target, and from there, whether you get a breakout or not, that's a bigger question. So even if you didn't get a breakout, at least there can be a reversal. So these are the trades that you can plan. Now, straight to formulas, there is no meaningful breakthrough. US last day told that Trump told that US have complete control over the Strait of Hormuz. Iranian leaders responded that Strait of Hormuz remains under the control of Iran. So both sides are effectively claiming the control. So the uncertainty is completely there, and that is the biggest risk, external risk that we have. Right. Secondly, despite this tension, crude oil prices have fallen. That is because of the increased inventories. Now you need to look at it when inventories are high. That shows demand is low or supply is high. In that situation, price will come down. That's exactly what happened. On the other hand, if inventory is low, it tells you two things: the use is high, the demand is high, or the supply is low, or the production is low. So the price will go up. So here the US crude inventories is increased by a massive 17.4 million barrel, and this is the highest weekly increase since 2023 Jan. Last 4 years, this is the highest. So that is why crude prices have fallen by 2%. Inventories are high. Okay, so that is something which you need to know. Brent crude is around 87, WTI is around 81. It is not because of cooling off or anything in the war, it is because of inventory. Apart from that, the US PPI, that is a producer price inflation data, that's at the low, that the beginning level, producer, then wholesaler, then consumer. So first, inflation should understand at producer level that have came down from June. It was 5.5, it is 4.7, right? The headline PPI and the core PPI, if you see, June it was 4.7, it is 4.2. That's a significant moderation because producer price inflation, this can feed into the future consumer inflation. So market this will interpret positively, and the rate hike possibility have came down from 50% last week to 33% now. That's again a very good sign. So US markets have rallied, and S&P is at fresh all-time high, 0.65%, Nasdaq 0.81%, Dow Jones 0.13%, VIX unchanged. So things are positive. Indian ADR also, if you see, banking ADR is zero point 0.3, fresh arbitrage positivity is there. So banking ADR is positive, and IT ADR is 1% positive. Reliance is marginally negative, but that won't be a big deal. But surprisingly, despite all this record high US market, lower US producer price inflation, and lower crude oil price, positive banking ADR, positive IT ADR, GIFT Nifty is trading at around 24 430. Means we are going to get an opening of 24 380 level. So 380 means we have 100 point to go on the upside. That is 480, the level I told you, 100 point to go on the downside. So you get a 100 point up move, short the market, 100 point down move, buy the market. When you see weakness, you short it, not when you get the breakout. Okay, if you find that level any weakness. Otherwise, if it is flat opening, if you need to take trade on the flat opening rather than these two levels, it should be on the upside. And I would say it's a buy on dip market, considering all these possibilities. I hope all of this very clear. Secondly, FIIs sold for 500 crore yesterday. DIIs bought for 4,350 crore. Day before also, FIIs sold for 1,000 crore. DIIs bought for around 5,000 crore. So if you look at the net inflow, including FII, DII. Yesterday it's around 4,000 crore. Day before also 4,000 crore net inflow. So total 2 days, 8,000 inflows there, crore inflows there, but market nowhere moved. In fact, it is coming down compared to that high. So who's selling? That's a bigger question. I told you already that retailers have changed bullish. Their positions have reduced. They started selling aggressive calls and started buying put. You can see new call open interest 13.5%, put open interest 13.5%. So that's both same. That's a straddle which is going on. So the PCR is around 0.92, and overall participant stance, if you take retailers, retailers were 18% bullish, that is reduced to 15%. So retailers reduce their bullishness. FIIs reduce their bearishness from 18.5 to 70. That's why market is consolidating. Otherwise, one group was strongly positive, the other is strongly negative. So good buy and good sell used to happen. Now that bullish positioning by retailers have reduced, bearish positioning by FIIs have also reduced. FIIs are selling puts. That means it's a kind of support, right? And retailers are buying puts and selling calls. That will be a resistance. Not FIIs, retailers. And prop traders have increased their positive exposure from 1.5 to 3%. So market is likely to be in a range for quite some time. Retailers are 78% long in futures, DII 71% long, FII 88% short, and approximately, if you look at prop traders, around 56% short. So if you are short in futures, normally what I do, I short in futures and then I go, and sell in the cash market. So that may be the plan. Let's see. So these are the main things that I want to discuss. So my point that I want to tell you is mostly Nifty is going to open flat. It's a buy on dip market, right? The best buying area will be 275, right? And if it is at 475, if you find a weakness, you can look for a scalping opportunity for mean reversion, but it's a positive market. Even the reversal trade also need to be with caution. So that's it, guys. Thank you so much. I see you after the market with the post market update. So thank you. I hope you trade responsibly.